the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're listening to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors and companies to watch. But first, a quick recap of some key movements. While Singapore shares dipped at about 2 p.m. today, as investors continued to mull earnings from notable names, including ST Engineering, CapitaLand Investment and Yangzijiang Shipbuilding. So the STI was down 0.08% at 3,904 points back then, with a value turnover of 1.08 billion Sing dollars in the broader market. Now let's take you through the closing numbers. As we shared with you earlier, the STI had losses to close in the green, up 0.34% at 3,921 points. In terms of value turnover, we are looking at 1.96 billion Sing dollars. Now gainers trailed losers though, 269 versus 289. Top advances for today, we've got for you Yangzijiang Shipbuilding CNY, GMH USD and New Incorporation USD. And in terms of top decliners, we've got here Yangzijiang Shipbuilding Sing dollars, UOB KHN and UOL. Now, in terms of companies to watch, we've got Yangzijiang Shipbuilding, because Yangzijiang Shipbuilding reported a net profit of 3.6 billion yuan, or around 660 million Sing dollars for the second half ended December, which is 50.5% higher than the corresponding year-ago period. Now, elsewhere, for more on the ongoing saga surrounding City Developments Limited, or CDL, to a solid set of earnings out of AI chip titan Nvidia, we've got more corporate and international headlines in focus, and also on deck how Hong Kong's main stock index hit above 24,000 points for the first time in 3 years. Now, for more market moves and views, I'm joined by David Zhao, Director at Azure Capital. David, welcome.
Hi, Tintian. Hi, everyone. Happy Thursday.
Happy Thursday. And let's start with the US this time around, David. US chip titan Nvidia recorded solid earnings for Q4 ended January 2025. So if we look at quarterly revenue, it stood at $39.3 billion US dollars, up 12% from Q3 and up 78% on an annual basis. The firm also gave a bullish revenue forecast for the current period. But really, how far did investors take the numbers in the stride, and did it meet their sort of lofty expectations?
I'm just glad, this result is out of the way. The market has really been waiting for Nvidia results for some time, as, the performance of Nvidia is to offer critical insights into the health, of the AI and semicon sectors, amid recent, market volatility. So even as, your revenue and EPS beat estimates, and I think from this morning's results briefing, company continue to give a very strong, first Q guidance of, revenue guidance of 43 billion versus estimate of 41.8 billion by the street. And if this 43 billion comes through, it will be a 65% increase year on year. So yes, still a slowdown from, the 260 plus annual growth in the same period a year prior, but it's still a strong growth at 65% nonetheless. And, all eyes, were also looking at, is AI data center revenue growth. And, based on consensus, we get anything from 31B to 31 to 38B. And I think Nvidia said, it actually recorded 35.6B in the fourth quarter, which was also up 93% on an annual basis. So this 35.6 billion basically sits within the range of consensus and not exceeding it. However, to a certain extent, I think the market, was just, quite wary of this already. So when the results came out, the market, actually sold down the stock, and I think it's down 1.5% as we speak.
Okay. Now back to the Singapore stock market as usual. David, how did the STI fare today, and any surprises when we look at the biggest movers, including Yangzijiang Shipbuilding, because it reported this 50.5% increase in net profit on a yearly basis for 2H ended December. Any thoughts on that?
Okay, the U.S. markets are looking rather shaky with the Nasdaq and Dow Jones, both closing below their 100-day moving averages. So it's not looking, particularly good for the U.S. markets. And as mentioned earlier on, high estimates by the market on Nvidia's earnings certainly didn't help. After Nvidia released its earnings, the Magnificent Seven is still not really out of its correction zone. So, and this, AI optimism of Nvidia, didn't, quite get to the Asian markets, and, STI, was modestly down throughout the day until towards the end when it managed to close, 0.3% higher. And on Yangzijiang, it was down nearly 50% in the morning, after a good set of results, taking a few steps back. Sentiment for this counter really started to sour on Monday when news, broke out that I think the Trump presidency has proposed higher U.S. port fees on Chinese built ships. So the worry is that, in the worst case scenario, there could be order cancellation at a time where Yangzijiang is sitting on a huge order book of US $24 billion, which will see them, earnings visibility all the way to 2008 and 2009. Wow. So
2028, is it?
Yes, all the way stretching out to 2028 and 2029, and of course 2026 and 27 are more or less secured. So they have order book stretching all the way a few years from now. So what is the alternative? I think the industry still needs a shift in the transition towards cleaner vessels, as mandated by the International Maritime organizations. And looking at market right now, there are no serious alternatives to Chinese shipyards, as the Korean and Japanese yards are somewhat more expensive. So we are of the view that the impact will still be muted, and this is again reiterated by management during their 2 p.m. A results briefing earlier on. But going forward, we could see a bit, slower order win going forward, but it's really not a big cause of concern.
Okay. Now, from, Yangzijiang Shipbuilding, let's take a look at this counter that's up today, CapitaLand Investment. The group today posted net profit of 148 million Sing dollars for second half ended December. That reversed a loss of 170 million Sing dollars seen in the year ago period. How significant is this for investors if we look at the counter's share price movements today? Up 4.8%.
Yeah, we are, deservedly so, because we are looking at a strong beat to its FY24 with this set of results, with total, I think, PATMI surging by 165% year on year to about Sing dollar 480 mil, which again beat ours and market estimates, and this was largely driven by portfolio gains of about 200 plus million and lower revaluation losses. Unfortunately for investors of property related companies, revaluation gains and losses could really swing the financial numbers of this company, but it is what it is. And if you look at the operating, PATMI, looking at the core numbers, disregards, all the valuation losses and those one-off financial charges. This operating metric has somewhat, moderated about 10% year on year, and it reflected the absence of divested assets. We also see that your revenue rose 1%, and as fee-related business revenue also climbed. So as a whole, I think the strong performance, which actually allows them to propose a total, payout ratios of about 30 cents. This payout ratio raising to 50% of cash PATMI compared to 30% previously is a show of confidence for the group. So investors could, really expect, higher payouts and higher returns in the near future.
Okay. Now, PATMI, just for our audience, refers to profit after tax and minority interests. Well, you spoke about property. Let's take a look at another property developer. Quite a bit of drama there, David, and that is CDL, City Developments Limited, that tussle, the boardroom tussle for control. Now, last night, I recall about 11:30 p.m., Executive Chairman Kwek Lian Beng issued a statement saying that following a court hearing, the serious lapses of corporate governance at CDL together with its subsidiaries have now been halted. Now, what impact do you think the saga would have on investors' confidence? I mean, some market observers noted that maybe the firm could have done better on corporate governance. The others said, the core business will remain unaffected. So where do you stand on this?
Okay, on governance issues, I don't think the exact issues are disclosed. So we may never know, what really are the issues. Yeah. So, this saga has indeed raised concerns about the company's stability and strategic direction. And CDL actually faces two major battles, in our opinion, boardroom power struggle now, and global economic headwinds. So while its property and hospitality segments actually show resilience, we think investor confidence is really shaken by this leadership uncertainty and, of course, related corporate governance issues. And adding fuel to the fire, if you look at CDL's recent FY24 results, revenue I think fell to 34%, and then I think their PATMI actually declined about 37%. So to be fair, this was, however, a much better results compared to FY23 when they experienced a 75% drop. But with a leadership crisis unfolding at the top and mounting financial concerns, CDL is really at a crossroad at a turning point. Can the company navigate its internal conflict and market changes, or will it succumb to instability? This will be the question to be addressed, not now maybe, but hopefully with the passage of time.
Okay. Now, if you're just tuning in, we're in conversation with David Chow, Director at Azure Capital. Well, David, let's set our sights on Hong Kong. Hong Kong's main stock index, the Hang Seng Index, rallied more than 1% today to strike above 24,000 points for the first time since 2022, I believe, first time in 3 years, boosted by a surge in Chinese tech giants. Now, that being said, shortly after, I believe, the Hang Seng sort of, gave up those gains, what is the outlook then for Hong Kong-listed equities? How far will Donald Trump's tariff threats dampen investor sentiment?
I mean, looking at the chart of Hang Seng, I do know that, the breakout of key resistance levels of this index, to a February 2022 high, certainly has ignited hope for further gains ahead. So while valuation-wise, we are back to the peak of last October's policy-driven rebound short term, investors' debate on the rally's sustainability has really intensified in recent weeks, since it's more also driven by valuation expansion as well as AI. So looking at it, we believe fundamental improvements, including slightly stronger economic data and stabilizing corporate earnings, will be crucial for a more broader and longer-lasting rally. So the unfolding, FY24 results season, serve as the first test to whether, the rally will have legs to run or not. So last week, internally, we actually look at around 2,000 plus, A-share companies that have released their numbers as of last week. So to give a broad statistics, about 60+% expect earnings to decline year on year or swing to losses, up from 53% during the interim results season. And during the sector level, I think 93% of companies in real estate also reported negative earnings alert, followed by media and commercial and professional services sector. So on the bright side, not a lot of bright spots, unfortunately. And certainly, if Trump were to impose higher tariffs, the sentiment would easily swing back to negative. So in the short term, investors can actually look for China's premium Li Qiang, who is scheduled to deliver his second government work report on the 5th of March. So for China stock investors and for that matter, H-share investors are likely to shift their focus from tech stocks, AI, back to stimulus policy over the next week. And we do think that the key areas that investors should look out for during this conference will be what will be China's government GDP and CPI's target. So what is the fiscal deficit target? What's the bond issuance quota? What about rate cuts? And of course, whether there will be more economic reforms, to be rolled out in the coming months.
And before we let you go, David, we must talk about U.S. President Donald Trump. Some confusion there on the timeline of the tariffs to be implemented on Mexico and Canada, whether that will be in March or in April. Now, the U.S. president, more notably, also floated the idea of a 25% reciprocal, quote-unquote, tariff on European cars and other goods. What do you make of that? And how far are such tariff threats a tool for negotiations?
Okay, this move is making me and the market and everybody else confused. And being confused by Donald Trump tariff plan isn't a flaw. It's proof that you're paying attention in the funhouse maze of his trade threats, and we have to pay attention, right? After all, so 1 minute he's imposing threats on Canada and Mexico, and then they are delayed, and then they are proceeding, and the flip flop just goes on and on. And then he really talks more about more targeted tariffs, thereafter, and so on. A reason it's so confusing is, Trump has made a multitude of tariff threats, and I think his end goal, or rather, is a feature of him, is to create chaos. Some may call it a bug, but I would really call it feature of Trump. And we will continue to see that over the next several years.
I see. Lots to watch indeed. Thanks so much for the insights, David. That was David Chow, Director at Azure Capital. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.